Good afternoon, everybody. Welcome to the Stock Market Morning Prep video. This video is being filmed on Friday, Good Friday, and is valid for Monday the 21st. I wanted to get this video out to you over the weekend so you can kind of get a good idea and peruse through the video at your leisure without any time constraints. So I want to get right into it. 2 weeks ago, I put out a video on a Saturday saying stock market vulnerable at these levels, and we did get a pretty decent correction. Short-lived, markets gap down, stay down, really never gave you a chance, a good opportunity to get short unless you were already short at these levels. And then on Monday, I said, look for a holiday reversal. We're probably going to reverse and we're going to probably rally. And sure enough, the markets did so as well. So technical analysis really works. You could see that. However, based on your trading plan, now my trading plan calls for a pretty good confirmation before I get in, and we had some extreme volatility this week. I mean extreme. I haven't seen that type of volatility since the crash, when markets would gap up, sell off, test the lows, and rally right back to the highs. So it's very hard to establish short-term day trade swing positions, if you will, and because I like to get something in a trend and stick to it and hold it and massage it and buy pullbacks and the trail up stops, where if you were a scalper, you had a field day this week. If you're not, you either got stopped out a lot or you were on the sidelines like I was. Now, I still feel the market's so vulnerable at these levels. Now, we did gap up and we did close positive on Friday, but there's still tons of red flags out there, and we are at the sweet spot right now where if the markets are going to reverse back to the downside, they're going to do it at these levels. Now, remember, we have Easter Sunday. We're closed today. It's Friday, Good Friday. And then we have Easter Monday in Europe. So we're going to have additional light volume. And when you have light volume days, the market tends to gravitate to the upside unless something happens. We get some bad news over the long weekend. So that could be still a theme that we move up a little bit more on Monday. Now, why do I feel that the market is still vulnerable? Now, based on my technical analysis, anything obviously could happen. But number one, bonds are holding up pretty well. Now, we did have the bonds here, the ZB, had a big bearish engulfing candle. We did test the 20. We're back underneath this big area of support, which is now, again, resistance. Okay, and we did have a little heavier volume. So definitely confirmation that people were selling bonds on Friday and putting money to work in equities. But the bigger picture here still remains the same here. We are, if you look at the bigger picture, you can see that we are, and we have a long way to go to the upside before we even get to the highs here. Now, if you could look, you'll see that, oh, excuse me, let me get this a little bit better here. You can see that we're consolidating at the upper end of the range. And if you want to really look at this, you could say that this could just be an inverted head and shoulders, left shoulder, head, and right shoulder here. Again, we don't want to go too far out, otherwise then it just becomes a sideways channel. But, you know, you could easily, let's just do this here. Let me get that. Oh, it's not working for me today. Okay. Well, you could see that we do have that inverted head and shoulders pattern, which is a bullish pattern to the upside. Now, if in fact that this pattern were to trigger, obviously it would send equities lower. Okay. Why? Well, obviously because the rotation out of money going out of equities, going back into bonds for that safe haven. So again, that left shoulder, head, and right shoulder. And the neckline would really come in slanted, coming down this way. Let me see if I can at least draw that neckline. Giving me problems today. Okay, so let's just grab one, and then just kind of just grab that area here. And if I tighten it up a little bit and I bring this out, you could see that we did break out of the neckline, but we went back in again. So, again, I do think that the markets are vulnerable, and if bonds really give us some clues, we get to the upside. There's blue skies. There's blue skies above. So you could see clearly here, there's nothing in the way of just literally going. And this is a big basing pattern for me. And these are the bases that I like to see on daily charts, okay? So let's take a look at something else here. Let's take a look at the Japanese yen. This is the spot yen. So it's inverted to what equities were doing. Now, if you're looking at the dollar yen, it would be correlated. So it would go and follow equities 1-to-1. Now, we have an ascending triangle. I've showed this chart many times to you. And then we have a bull flag here. Now, there is a lot of overhead resistance. We have a Fibonacci cluster. We have the 200-day. And then, of course, if we break out of that, I think the big area is going to be, the big target is going to be this area here at 1020. Now, this is a very volatile spot, okay? But the yen, if the yen starts to muster up some steam and we get a big move to the upside, I think you're going to have, again, continued equities looking to revert back to the downside. Now, we did have a pullback in this bull flag, which is a bullish pattern, on lighter volume. Okay, you can see that here clearly, that we have lighter volume, which is bullish, but it's going to need to stay there. Now, remember, we could still test the lower end of this channel, this trend line, excuse me, and still make higher lows from this previous low, and this low, and that still would be a good pattern. Remember, we're going into the apex of the ascending triangle, symmetrical, if you will, and then that's going to build energy. So it's really, the markets are really at an inflection point here. Really could go either way. But here are some of the clues that I think that the markets are still vulnerable. Now, here's the IBB, which is the Biotech Index ETF. Now, biotechs are heavily weighted in the NASDAQ, number one. Number two, it's also a good gauge of risk, right? Biotechs are very risky, but market participants like to buy them when they feel good about the market. Well, look at what's happened here. We literally sold off 53 points, 53 points in literally in just 6 weeks. Now, we did bounce back up above the 200, and nothing goes down in a straight line. But this is another clue to me that that the markets are still in trouble. Another one is the consumer discretionary. If consumer discretionary, if the markets were healthy, we would see money flow back into consumer discretionary instead of consumer staples. Okay, this is still trending lower in bearish symmetry, lower lows and lower highs, right? Let's take a look at utilities. Same as utilities. Money's being parked in there for yield and just for a safe haven until volatility starts to die down. Because as you know, we have plenty of volatility here. So again, not a good sign. These are not good signs when you have a healthy risk-on type of environment in the marketplace. Okay? Now, the feather in the bull camp is the transports. Now, I love looking at the transport. The transports really give you a gauge of risk on, risk off, and that's the most important. If you see here, we have 4 days of explosive moves to the upside. It finally woke up. Big, large ascending triangle. And if the markets are to continue, the transports may take this market, may lead the way higher and then move everything else up with it, okay? So that's going to be the key, and that's something that we're going to need to watch here in the coming days, and actually the coming days and weeks, okay? Very important here. So really important here, okay? So now let's go into the Qs. Now the Qs, again, heavily weighted in biotechs, and also our leader, which helped us run up with the market, the Baidu, the LinkedIn, the Teslas, Apple, all Amazon, they're all getting decimated, and that's not a good sign. Leaders that would play the leadership role as far as stocks are concerned have been taking it on the chin. And look at what we have here. Bearish symmetry. Bear flag, bear flag, bear flag, bear flag. Now, this is one of the sectors that I am going to be looking to get short. If, in fact, we can get back up above the 86.80, up in here, that'll be the 20. Anywhere in this area here, the 20 up to the 50-day moving average, stops are going to be back above here. Now, am I going to just short when we get up there? Of course not. I'm going to wait for a reversal candle, and we're going to take out the previous day low. Okay, then we're going to start looking for downside targets. More so, the first target would be this $84. As you can see, this is going to be the first target, and then of course the 200-day. All right, as you can see, this thing held pretty nicely here, and we did hit the target. Let's take a look at the next indice, which is the IWM. Same thing. You know, it's a good gauge of risk. Russell 2000 ETF, small cap companies, more riskier, obviously. And look what's happening. It's the same chart, repetitive patterns, right? Bear flag, bear flag, bear flag, bear flag. Breaking down, we caught this uptrend line from 2012. And look at what's happened, though. Low volume on the rise up. Same thing with the Qs. This is not a good sign here, okay? So I am still looking for some downside movement. But again, my technical analysis today could change Monday morning on the opening. I mean, it could literally change. But as long as we stay below these areas, 113, let's call it 114 in the IWM, and again, my targets in the Qs, and I'm going to give you targets in the S. If we can stay below that, and our leaders can stay below that, then you're going to see downside movement. Now, if we start to break back up 2-3 days, and you could still be in a downtrend here and catch this uptrend line. But again, at that point in time, if that's the case, you're going to need to reevaluate it. But I'm still looking for lower prices going into next week. And lastly is our E-mini S&P chart. I mentioned yesterday my target to look to get short would be anywhere from 58 to 65, right in here. We got this big band of resistance, and we have a nice big bearish rising wedge. It is only bearish, mind you, when we do break below that on a closing basis. So right now, it's just an uptrend channel, or a wedge, if you will, and then we need to break below 1854. Okay? So we hit our upside targets. Now, if let's say we break out of this channel, the real short-term target would be the 1272 extension of 1877, and then, of course, the high, which would be 1892, I believe. 1892.50, and then the bigger upside target will be this 1916, 1920 area, another upside target of the 1272 extension. Okay, so good argument for further downside, but the market is going to need to prove itself, and by me saying that, price is going to have to react to these areas, hold, and start selling off, breaking key support levels. So please keep that in mind. So now Monday, remember, we have Easter Monday in Europe, which will be very, very light volume. And again, I would not be surprised if the markets continue to rally, at least in the morning session. We're going to see how they close going into Monday's close. Now, if we get a weak close, then I think that we may be pushing the downside going into the early part of next week. But if we do rally Monday and we rally into new highs on Monday, then I think it's just a matter of time. We might have to wait another day or two. But remember, technical analysis, you get the picture, and now you got to get the confirmation. Okay, so we could easily revert back to the upside, and all of a sudden I'm bullish for another 2 or 3 days. So just keep that in mind. Have a great long weekend. I hope you're enjoying yourself with you and family. The good holiday. It's nice to have a day off from the market so we can really digest and really dig into good technical analysis work. All right, have a great day, and we will have another video back to you on Tuesday. Take care, everybody.